LiteFinance, the world of financial freedom.
Good morning, it's Monday, April 25th. We are opening the week in the markets. So in today's material, of course, I will talk about the upcoming major macroeconomic events, i.e. the publication of the macro data from the calendar, such as preliminary GDP readings from the largest economies, next on the consequences of Macron's victory in France, then about the accelerating economic growth in the euro area and the fact that this is most likely the end of high oil prices. So let's start with the macroeconomic calendar. On Monday, we will actually receive data from Germany on IFO business sentiment, where consensus points to still positive figures. On Tuesday, in turn, data from the US non-durable goods orders and consumer confidence, which is one of the most important leading indicators. Then, sales of new homes and data on oil stock from API, i.e. these are theoretically a less accurate one, because these are data from the private sector. There is no data from state warehouses. So, then on the night from Tuesday to Wednesday, inflation data from Australia, which may turn out to be important in terms of interest rate increases. The quarter-on-quarter data in annual terms, according to analyst consensus, will increase by more than 1%. Looking at the narrative that prevails among central banks, this will increase speculation about an interest rate hike. So, later on Wednesday, we have US data on home sales and data on crude oil inventories, which in theory are more reliable. So the consensus is about an increase in inventories, so if the forecast proves correct, given the previous reading, we can expect a further price decrease. So on a Thursday, we start with the overnight data from Australia on retail sales, then the decision on interest rates and the press conference of the Bank of Japan, which is unlikely to bring anything new to the table. Japan, as the Eurozone, is holding back any decisions for the time being. In the afternoon, flash US data on the GDP for the first quarter, which is very important, and initial jobless claims. We have the most packed calendar, I think, on Friday, where we will get a PMI data from China, which showed weakness recently. The indicator dropped below the value of 50, which shows the growth or contraction of the economy. Then preliminary GDP data for QE from Germany and the Eurozone, along with the inflation from the Eurozone. Then the Canada's GDP for the February and another inflation index from the US. This one excludes the price of energy and the seasonal food products. So going further on the issue of Mr. Macron's victory in France. On one hand, it is good in the short term for the euro stock market because everyone knows what to expect, right? So, and despite the fact that Le Pen was perceived as a pro-Russian politician and opponent of the European Union, in reality, it would not be as terrible as some media were portraying her. This could be a better option in the long term. It would give the opportunity to achieve a certain political impasse of power in the EU Parliament, to change this duopoly between Germany and France. It could be better for countries like Poland, for example. And at the moment, the reality in theory should be a positive signal for the euro, and so far, except in tandem with the US dollar, it is happening. So now let's move on to the data from the euro area. But first, however, a brief comment on energy prices, and more specifically on oil. So, oil may be one of the potential sources of easing the price pressure. While the Russia-Ukrainian war has put pressure on oil growth and energy costs, it is possible that this trend may be moderated somewhat and may result from a slowdown in world production. As you can see in this chart, the price of oil has risen much more than the current global production expansion. So with the March PMI data showing only 2/3 of all economies covered by PMI indices will report an increase in production. i.e., looking at the chart, it is about a 66% increase, while the price of oil is rising by 100% during this period. So there is a divergence here, and we know well that the short-term prices are driven by sentiment, but in the long run, oil does not have the fundamental basis for growing if this trend continues. So okay, now for the data from the Eurozone. So, Eurozone economic growth accelerated in April as the services sector, recovering from loosened COVID constraints, helped to compensate for the near stagnation in the manufacturing area. Employment also increased and business sentiment for the coming years rose from the 17-month low. Although the war in Ukraine, rising prices and the persistent effects of the pandemic, i.e. the broken supply chains, especially in the manufacturing sector, are certainly a factor that worsens the reading of or dampens optimism. But the prices for goods and services have risen at an unprecedented rate, as well as corporate costs in April, suggesting that inflation will continue to rise. So the leading data, i.e. PMI for the Eurozone, is rising, which can be seen in this chart together with GDP data. In the next chart, we have a breakdown into the production and service sector. Here you can see what is a balancing factor on the contrary to the production. So summing up, it looks quite promising. However, issues related to the manufacturing sector are a strong negative factor. If the service sector drops drastically, which should not surprise anyone due to the boom related to easing the restrictions, then the entire focus should be on the reading of business sentiment, which at the moment are very optimistic. So moving on, Mrs. Lagarde may be inclined to raise interest rates at the end of the year, but we do not know where they have a margin in terms of inflation, beyond which they will want to act a bit earlier, because, as we analyzed a moment ago, prices will most likely increase even more. So okay, now a few more words about the charts. Despite its weak fundamentals, Brent crude oil has a chance to rebound from the psychological level of $100. However, if we do not receive a clear buy signals, I would wait for this barrier to be broken and look for an entry into the shorts. Next is gold. If it will break definitely below the level of $1,920 per ounce, it may cause an avalanche of orders and a stronger move to the south. Russian banks buy gold at a fixed price of 5,000 rubles per gram, which translates into $1,940 per ounce. So breaking from such a strong defended level may result in a stronger move. Then the Euro-CAD went as planned, as we talked about a week ago. But from where it was previously targeted, the price rebounded and returned to a higher level. We broke out of the downtrend and will likely be testing the top support. We realize that the Canadian dollar is strongly positively correlated with the oil price. And the oil price we talked about a moment ago has weak fundamentals currently, so the euro might be up in the near future. So going further, the euro GBP strengthens at the level of 0.8465. So there we have also 50% retracement of the last correction move, and at the same time the upper limit of the downward channel. If we break this level, perhaps we will see increases on this pair to 0.8600 levels. So okay, that's it for today. Thank you for watching, and I'll see you in the next one. Bye bye.